And I actually have very mixed feelings about this stock, so I'm kind of going to tell you. All right, welcome to Talkin' Investing. I am Tom, and as always, this is not financial advice. Today, I would like to talk about Beyond Meat, stock ticker BYND. Beyond Meat released their earnings after hours today, so I want to go through their earnings and talk about what I think is going to happen with their stock. If you're new to the channel, please subscribe and hit the notification bell. And of course, if you like this video, please smash the like button. Also, feel free to drop a comment below. So let's take a look at Beyond Meat. Beyond Meat closed the day today up 3.38% at exactly $49. On the day, it did get as low as $42.67. That is its 52-week low. The previous close of $47.40 was its previous week low as well. So it closed the day up a little bit, but however, it announced earnings after the bell, and you can see that in after hours, it's down 11.22%. So it's getting back down near to its lows on the day, which is right near its 52-week low. I want to go through their earnings release, and then I want to look at the chart and talk about where I think their stock is going in the short term and in the long term. News release details. February 24th, 2022. Beyond Meat reports fourth quarter and full year 2021 financial results. So this was after the bell on Thursday, February 24th. So let's just go through some of the highlights. Fourth quarter 2021 financial highlights. Net revenue was $100.7 million. A decrease of 1.2% year over year. A decrease year over year, obviously, for a small cap high growth stock, that's not good. This basically was what analysts were expecting, though. I think they were expecting 101 million. This is 100.7, so that was pretty close to analysts' expectation, but of course, that is a disappointment to be down year over year. Gross profit was 14.2 million, or a gross margin of 14.1%. Net loss was $80.4 million, or $1.27 per common share. So if I take this $1.27, I want to go take a look at what analysts were expecting. Okay, so there's quite a bit of analysts that cover this. It looks like the fourth quarter revenue, you can see the average estimate was 101.36 thousand, and as we saw in the report, they came in at 100.7. So very, very close, but a miss, so that's never good. But here's where the real problem is. The average analyst estimate, and this is on 14 analysts, they were expecting a loss of 71 cents a share. If we go back to this report, you're going to see it's $1.27 per share. So that is a very big miss. Now, again, typically I wouldn't get that excited about a miss on net income or net loss for a small cap high growth stock. However, in combination with the fact that they actually decreased their sales year over year in the fourth quarter, these things put together are not good news for an earnings release. Full year 2021 financial highlights. Net revenue was $464.7 million, an increase of 14.2% year over year. That is on the very low side for a high growth company like this. So it is growth, but it's less than what I would expect out of a company like this. Gross profit was $117.3 million, or gross margin of 25.2%. So you can see for the year they had 25.2% gross profit, and in the fourth quarter it was 14%. So this really was a very tough quarter for these guys. Their revenue was down, their gross profit percent was down, their loss was much more than expected. So that's kind of the trifecta. That's 0 for 3. So you're going to expect a stock to take a hit on earnings like this. Net loss was $182 million for the year, or $2.88 per common share. Okay, I'm just going to take a look at a few of management's comments. So Beyond Meat President CEO Ethan Brown commented, in 2021 we saw strong growth in our international channel net revenues, as well as sporadic yet promising signs of a resumption of growth in U.S. food service channel net revenues. We'll look at those later. He goes on to talk about COVID-19 variants played a big role in their missing their numbers. So then he says, despite the variability and challenges of the year, we did not deviate from building the foundation for our long-term growth. So I think you're going to see later what that means, because they had some serious capital expenditures. The investments we made in our team, infrastructure, and capabilities across the US, EU, and China, as well as extensive product scaling activities for key strategic partners, weighed heavily on operating expenses. So he's giving some of the reasons, and this is reality. Things happen, and these are some of the contributing factors as to why their quarter and their year was not what they hoped it would be. So we saw their revenue of $100.7 million. So here it is broken down, $100,678,000. If we go line by line, you'll see it's broken down between U.S. and international. For the 3 months ended December 31st, U.S. retail sales were down quite a bit, almost 20%. U.S. food service sales were up quite a bit, 34%. So that piece is encouraging. Why the retail was down 20%, that's a pretty significant decrease. On the flip side, their international retail was up 10%, so that's a modest increase. And their food services internationally were up 36%. Altogether, that equaled a little less revenue in the fourth quarter of 2021 than in 2020. Then here's the same numbers for the year. You'll see, similarly, retail sales was down in the U.S., food service was up in the U.S., retail sales internationally for the year was up 123%. So that's a very big number, and I think that's a big part of their future growth plan is they've only just begun to expand internationally. You'll see their entire retail internationally is significantly less than what it is just in the United States. So there's a lot of room for growth left. I want to look at balance sheet and cash flow highlights. The company's cash and cash equivalent balance was $733.3 million. Net cash used in operating activities was $301 million. So just for regular operations, they used $301 million. So that's negative $301 million cash flow from operations. In addition to that, and that is compared to $40 million last year. So that's a significant increase in negative operating cash flow year over year. They then say capital expenditures totaled $136 million for the year ended December 31st, compared to $57.7 million for the year ago period. So these numbers have to improve dramatically, or they will be out of cash in a year and a half, and they'll be in a position where they need to raise money. So they don't talk about their cash forecasting. So all I can say is this is what they did over the last 12 months, and I think they probably need to do a lot better than this over the next 12 months. So let's cut to the bottom line. Based on management's best assessment of the environment today, the company is providing the following guidance for the full year 2022. Net revenue in the range of $560 million to $620 million, an increase of 21 to 33% compared to 2021. Every piece of this quarterly/annual earnings report is a little bit bad news. Not saying it's a disaster, but they missed on revenue, they missed on income, they lowered their projections for next year, they used a lot of cash. This is a pretty tough report. And companies have not been treated well recently. Some of them, even on decent reports or good reports, have taken a hit. This report is not good. So I want to go over to the chart and show you what the chart looks like, and then I'm going to give you my thoughts on where I think we're going from here. Okay, so this is the Beyond Meat chart on the 1 day, on the daily time frame. So each one of these candles represents 1 day. So you'll see this green candle right here represented today. We gapped down low at the open and then went up basically all day. But on a bigger picture, you'll see we're at $49 right now here at Beyond Meat at the end of the day, and then in after hours we're at about $43. Their 52-week high was $157, and that was in July. So that was about 8 months ago. However, just 1 month earlier than their 52-week high. So this is just their 13-month high was $221, which was also their all-time high. So 13 months ago, this was trading at $221. So if I go from its all-time high to where it closed today, that is down 77.5% in the last 13 months, basically. If I go from its 52-week high, because remember this was just outside of that range, it's still down 68.5%. Very tough year for Beyond Meat. So the first thing I would say is I would warn everybody, this is a very volatile stock, and this has definitely been a falling knife for months and months and months. So please remember, this is not financial advice. Before you decide to invest or not invest in this, please do your own due diligence. I'm going to tell you what conclusions that I'm drawing. But don't make your buying decision based on what I say. You guys need to know the stock yourself to make your own buying decision. And I actually have very mixed feelings about this stock, so I'm kind of going to tell you both sides of the story. So my initial feeling is that this is a stock that's been hitting its 52-week low on a regular basis for the last 6 or 8 months. I think this is still on its descent, despite the fact that it's now down over 80%. My target number is down 90%. So that is just my personal feeling. This could turn around tomorrow, but given that they've been hitting their 52-week lows on a regular basis, and now they've come out with earnings that were pretty much a miss across the board, in my opinion, I do think that they're going to turn into one of these companies that just finishes the run and ends up down 90%. So from $221, that's basically a price target of $22. Based on its massive pullback, I'm trying to find a time to start dollar cost averaging into this. But for me, I'm deciding that this is too soon. At $49 or even, at $43 or $2, where it is after hours today, that's still a 50% decrease to get down to $22, which would be the full 90% pullback. So again, there is no guarantee that this is pulling back 90%. A lot of you may feel that that's arbitrary. I have a portfolio full of stocks that I waited for them to pull back 90% on. Some of them even went down after that. And these are not bad companies. These are companies that I think have good fundamentals and a strong future. It's just that it was that kind of year for small cap, high growth stocks. On a 5-year time horizon, I think this company has massive, massive upside. There's a few things that I think nobody's looking at that are going to increase sales dramatically, as well as profits. They've set up a lot of very strong relationships. Those are all going to grow over the coming years, and I do think this stock will end up being headed in the right direction. I'm hesitant to buy it since my personal opinion is it may pull back as much as 50% from here. Perhaps at $30, I will start dollar cost averaging in. I'll have to see how I feel at that point. If it ever even gets to that point, right? I don't know. Maybe today's the bottom. So again, be careful. Use your own judgment. You might feel that this stock is in a good spot to buy right now. That's my summary on Beyond Meat, and I hope it was informative. So thanks so much for watching, and I will see you in the next video.